Hi, welcome to RealGoldMoney.com. I'm Gary Franchi. Just recently, radio host Alex Jones from Infowars.com was joined by financial expert and author of the new book, The Death of Money, James Rickards, to talk about the potential meltdown which could easily explode into a global crisis, altering the lives of billions of people around the world. Now, before we play that clip, I want to make sure you pay very special attention to his disclosures about gold and what will happen to it when the crisis hits. And at any time, if you want to jump to the solution to protect yourself before it happens, use the link below for the overview of a program that just may save your life.
Headline: The almighty dollar is in peril as the global de-dollarization trend accelerates. And joining us is New York Times bestseller James Rickards. The Death of Money is his latest book, The Coming Collapse of the International Monetary System. We're going to spend the first half of the interview talking about where he sees the current system going. Again, his new book, The Death of Money. This is such a big deal, what you're about to hear in the next hour. The death of money, the coming collapse of the international monetary system. And what's in the news today? There is an acceleration out of the dollar by allies like South Korea, not just China, not just Russia, not just Japan, not just the Middle East. This is a huge deal and being done by design, because before global governance can come in, the dollar has to finally die. They're going to ride the horse till it dies. But we have a real financial expert with us. The first half of the interview, we're going to skip this network break. This is so important. With James Rickards, will be on the monetary issues and his new book and his last best-selling book as well, Currency Wars. Then we will get into the insider trading he witnesses, an incredible whistleblower. James Rickards is the author of the national bestseller Currency Wars, The Making of the Next Global Crisis, that predicted everything that happened in 2008. The Death of Money of the Coming Collapse of the International Monetary System is his latest book. He is a portfolio manager and partner in the Merchant Bank based in New York. He's also a counselor and investment advisor and has held senior positions at Citibank, Long-Term Capital Management, and Caxton Associates. In '98, he was the principal negotiator for the rescue of LTCM, sponsored by the Federal Reserve. His clients include institutional investors and government directorates. Mr. Rickards has delivered papers on risk at the Singularity University, Los Alamos National Laboratory, and has written numerous articles on risk management. He is also an advisor on capital markets to the U.S. intelligence community and the Office of the Secretary of Defense. JamesRickardsProject.com is the website. We'll put that up on screen for TV viewers. Thank you for coming on, sir. I really appreciate it. And you've got the floor to break down in layman's terms, but then more technical, what we face, where we are. And then I want to get into the big picture and basically how people can protect themselves. Thanks for coming on.
Thank you, Alex. Great to be with you. And yeah, the new book, The Death of Money, you know, it sounds like a provocative title, but it's actually not meant to be that provocative. The international monetary system has collapsed 3 times in the past 100 years. It collapsed in 1914, again in 1939, and again in 1971. So these collapses happen every 30 or 40 years, and it's been a little over 40 years since the last one. Now, that doesn't mean it collapses tomorrow like clockwork. It just means that no one should be surprised if it does. And there are plenty of warning signs, official actions, pointing very much in this direction. And then, so what I do in the book is I take the reader through the instability of the system. I say, it's not a question of committing errors in the future. The errors have already been committed. The blunders have already been made. It's like snow that's piled up and we're waiting for the avalanche. We're just waiting for that one snowflake to bring it all tumbling down. So that's actually fairly foreseeable. But what I try to do is say, okay, when that happens, because it has happened 3 times before, what comes next? What will the future international monetary system look like? And then go all the way back to square one. What can investors do today to sort of prepare for that? So that's the big picture. You know, my first book, Currency Wars, came out in 2011. And if you open up to chapter 8 of Currency Wars, guess what's there? It talks about Ukraine, Gazprom, Russia, natural gas as a weapon, et cetera. In other words, all the things that are happening today were in my 2011 book. If you want to know what's going to happen 2 or 3 years from now, read the new book, because that really is the purpose, is to look over the horizon and see what's coming.
Obviously, everyone should get the book. Everyone should get the book, and it's available. You can link through it, James rickardsproject.com or Amazon, you name it. Go ahead.
Now, let's get specific with regard to the dollar, Alex. You know, when you write a book and it comes out, hopefully you get a lot of things right. But one of the things you ask yourself is, well, did I get anything wrong? Is there anything I might have missed? And looking at the book, which has only been out for a few months, I would say the one thing is things that I thought might take a year or two to play out are actually playing out now. Notice this collapse is happening faster than I thought, even when I wrote the book last year. And just to be specific, imagine a stool with three legs, and resting on the stool is the dollar. And the three legs are Russia, China, and Saudi Arabia, the three props, if you will, under the dollar. Let's take them one at a time. Saudi Arabia, that's basically the story of the petrodollar. You know, in 1974, in the late 70s, the dollar almost collapsed at that time. We had 50% inflation between 1977 and 1981. We had three recessions back to back to back. You know, the price of gold went up 2,000%. It was a complete run on the dollar. Henry Kissinger struck a deal with the Saudi Arabians, with the royal family in Saudi Arabia, to price oil in dollars. Now, there is no reason then or now why oil has to be priced in dollars. At the time, it could have been priced in Deutschmarks or Japanese yen, Swiss francs, or gold. Today, it could be priced in euros, maybe dollars and the other things. But there's no reason oil has to be priced exclusively in dollars. But it was. That put an enormous prop under the dollar because everyone needs oil. So if oil is priced in dollars and you need oil, that means you need dollars. People who don't have any other reason to want dollars have to have them to buy the oil. So that was a support for the dollar. Now, what was the other side of the deal? The other side of the deal is that we, the United States, would guarantee the national security of Saudi Arabia. We would prop up the House of Saud. Now, that deal lasted until last December. Last December, President Obama stabbed the Saudi Arabians in the back by anointing Iran as the regional hegemonic power in the Middle East. Now, what that means is, you know, U.S. is withdrawing power from around the world. That's very obvious, and the president said so in his speech at West Point. But what he wants to do is sort of leave a cop on the beat. So in every hotspot around the world, there's some power that's going to kind of take care of things in the neighborhood, if you want to think of it that way. Well, the U.S. greenlighted Iran as the cop on the beat in the Middle East. We greenlighted their nuclear ambitions. I know there are these talks underway, but the fact is the centrifuges are still spinning. The Iraq reactor is still operating, and that is only good for one thing, which is it produces plutonium, which is only good for one thing, which is making atomic weapons. And so that's going to full speed ahead. So the Saudi Arabians took that as a stab in the back, and they should. And by the way, in a recent briefing given by very high-level U.S. officials to the King of Saudi Arabia, they went through this long, 45-minute presentation about all the nuance in our policy with Iran and all that. The King, who I think is 91 or 92 years old, at the end of it, he just grunted and said, "They get one, we get one." Those are his exact words. And what he meant was Iran gets a nuke, Saudi Arabia, they get nukes the next day. They'll just fly them in from Pakistan. So now that we've reneged on our side of the deal, no longer guaranteeing the security of Saudi Arabia, they feel free to renege on their side of the deal, supporting the dollar. So watch for watch for oil to suddenly be priced in euros and other currencies. Now over to China. What's China doing? Well, China kind of painted themselves into a corner. They bought almost $3 trillion worth of U.S. dollar denominated securities for their reserves. Reserves are just your savings account. So, if you make $50,000 and you spend $40,000, you've got $10,000 in savings. You can put it in the bank or the stock market or whatever. Well, it's no different with countries. When countries run a trade surplus, they have savings and they have to put it somewhere. And in China's case, those savings go into the trillions of dollars. Well, they put all their savings into, unfortunately for them, U.S. Treasury notes. Now, there's an old saying in banking, if I owe you $1 million, I have a problem. But if I owe you $1 billion, you have a problem because you have to collect the money from me. So since we owe China $3 trillion, they have a problem. They can't dump those securities. They might want to, but the market's not that big. So what are they doing instead? They're buying gold by the thousands of tons. And just to put that in perspective, there are only about 33,000 tons of official gold in the world. Official gold means the gold held by central banks and sovereign wealth funds and finance ministries and so forth. So there's only about 33,000 tons in the world. China has bought about 3,000 tons, or 10% of all the official gold in the world, just in the last 4 years. Now, they have not disclosed this, by the way. You have to gather this from mining output, Hong Kong imports, covert sources. They're using military and intelligence assets to do this. But the evidence is there, and this is all in my book as well. So why are they doing that? Well, they're creating a hedge position. In other words, they can't dump the treasuries, but if we inflate the dollar, which we're trying to do, Janet Yellen has said we need more inflation. Inflation is just theft from savers. I mean, inflation sounds like a technical word. Just think of it as someone reaching in your pocket and stealing your money. That's what inflation is. So Janet Yellen says we need more inflation. In other words, we need more theft from savers. Well, China's the biggest saver in the world. They got $3 trillion, as I mentioned. So if we inflate the dollar, they're going to lose on their paper. But if they have enough gold, gold's going to go up a lot. So they're going to lose on the paper, but they're going to make it up on the gold. So that's the way to hedge their position without dumping the treasury securities. That's what the Chinese are doing. Over to Russia, we're in a financial war with Russia. Of course, Russia invaded Crimea. It's causing trouble in eastern Ukraine. No one, left, right, or center, thinks there should be a military response to that, and there's not going to be. But the U.S. doesn't want to be seen to be doing nothing, kind of rolling over, playing dead. So the president has announced economic sanctions, which are a form of financial warfare. By the way, we've been in a financial war with Iran, or had been from 2012 up until the end of 2013. But the president sort of called a truce in that war and eased up on the sanctions on Iran. That was part of that stab in the back I mentioned earlier. But now we're in a financial war with Russia. By the way, these sanctions are fairly tame. You know, it sort of amounts to the fact that a few oligarchs may not get to go to the Super Bowl next year. But the bottom line on all that is Russia's different from Iran. They can fight back. They can seize U.S. assets in Russia. They can dump U.S. Treasury securities, raise our interest rates, sink our stock market. They can unleash their hackers to shut down the New York Stock Exchange. So the U.S. has to be careful about going too far in that realm because Russia can fight back. So
James,
all three of these legs.
Let me just throw this in. If people just joined us, James Rickards is our guest. He's the best-selling author of Currency Wars, if he's just tuned in. And he's breaking down what his new book gets into that just came out a few months ago, The Death of Money, the Coming Collapse of the International Monetary System. And I want you to quantify for folks, when you say U.S., I guess you mean the collection of special interests kind of allied with the Anglo-American establishment, or correct me if your view is different than mine, and what their worldview is. I see them pushing such a complex strategy that there isn't even really a strategy at all. They just think there's a strategy, and they're destabilizing the whole world in a belief that they can manage crises for more personal gain for the political and elite corporate class, but in the overall, losing true American soft power in the end, and bringing in a global crisis that basically could end superpower status for the United States, and we become some weird hermit third world, you know, dictatorship of the totalitarians.
Well, there is a difference between the United States government and America the Beautiful. I do think that's important to bear in mind. I'm really speaking about the government and official
Sure, but
actions.
what do you think of what they've done?
Alex,
yeah, well, I mean, what do you think of what they've done?
Well, look, I just I don't have to get into any hidden conspiracies. I just take their actual words. I met with members of the Federal Open Market Committee. I've met with central bankers, and privately, not publicly, but privately, they will tell you they don't know what they're doing. They are making it up as they go along.
Exactly.
They say, we try this. If it doesn't work, we pull it back. If it works, we try a little more. I mean, the Federal Reserve has had 15 separate policies since 2009. You know, the forward guidance, first it was 2012, then it was 2013, now it's 2015, QE1, QE2, QE3, which had Part A, Part B, Operation Twist, Currency Wars, you know, you name it. I mean, on and on and on. When you have 15 policies in 5 years, you don't know what you're doing.
Exactly. So bottom line,
it's basically,
bottom line, Judgment Day is coming, and the question is, what will Judgment Day look like?
Well, Judgment Day will look like a collapse of confidence in the U.S. dollar. And, you know, people say the dollar isn't backed by anything. Actually, it is backed by one thing. This is what Paul Volcker says, and I think he's right. It's backed by confidence. If people believe the dollar is a store of value, they will continue to use dollars. But the minute they stop believing that, the dollar can collapse like a house of cards. Now, the problem with the Federal Reserve in particular, and I would say the U.S. Treasury, they take confidence for granted.
The Death of Money is the book, available in bookstores everywhere. The Coming Collapse of the International Monetary System. Since his book came out, we've seen the acceleration away from the dollar, and we've seen food prices and a lot of other things increase, even with the Cook numbers. We're going to talk to him about that, when the collapse is going to accelerate, or can it be staved off at this point, with his expert view. All right, going back to our guest, who is the best-selling author of, well, multiple books, highly recommended from Max Kaiser. Everything he's saying from my research is spot on, but he goes deeper with his different connections inside the Federal Reserve and the defense establishment. JamesRickardsProject.com, or just Google James Rickards, and his site will come up. The new book is The Death of Money, and he joins us via audio Skype now. Be sure and go check his website out. You can see him on Fox News and other channels as well. Some very informative videos up there. So boiling it all down, this is going to happen. The question is, when will it happen? And my issue for you is, I'm not an economist or a top investor like you who's made so many accurate predictions. I know it's coming, but I already see prices increasing everywhere as the controlled media tells me prices aren't going up very much. I already see when I travel out of the country, the dollar is frowned upon. In places just a few years ago, it was smiled upon. I already see all over the place signs of real depression in many areas. And then I see the government gearing up for civil unrest, the Department of Defense admitting it. I mean, they've got to know Obamacare is going to shut down the economy. Shutting down power plants is going to shut down the economy. They've got to know open borders, all of this. I mean, you're saying it's a bunch of ineptitude, and I know they have been trying everything under the sun. I'm sure that's part of it, but isn't there the vulture capitalist, crony capitalist angle of this, that a lot of insiders are going to make a lot of money out of a depression, or do you disagree with that, sir?
No, I think that's exactly right. And Exhibit A, I would say, is Warren Buffett. Now, look, Warren Buffett has this image as the avuncular sage of Omaha, the stock best friend, blah, blah, blah. But when it comes to billionaires, don't listen to what they say, watch what they do. Warren Buffett's last two big acquisitions, go back a few years, he bought the Burlington Northern Santa Fe Railroad. Now, he bought the whole thing, by the way, and took it private. He didn't just buy a few shares. He bought the whole thing. Now, what is a railroad? A railroad is nothing but hard assets. It's right-of-way, mining rights adjacent to the right-of-way, rail, rolling stock, yards, switches, signals, etc. How does a railroad make money? It moves hard assets as freight, coal, corn, wheat, steel, etc. So a railroad is the ultimate hard asset. It's composed of hard assets, and it makes money moving hard assets. What was Warren Buffett's next big purchase? He bought oil and natural gas resources. And by the way, he doesn't need the Keystone Pipeline because he can move his own oil on his own railroad. You line up 100 tanker cars, you got a pipeline on wheels. So Warren Buffett is a guy who's dumping dollars as fast as he can, getting into hard assets. It doesn't matter what happens to the dollar. The dollar could be confetti, which has happened before to other currencies. He still owns a railroad. He still owns oil. He still owns natural gas. He owns things that people need. This is very similar, by the way, to what happened in the famous Weimar hyperinflation in the Weimar Republic in Germany in 1922 and 1923. We all know who the losers were. The losers were the middle class savers. If you had money in the bank, a pension, an annuity, an insurance policy, retirement income, a steady job, you were the loser because all of your fixed income assets were wiped out. But there were a lot of winners too. The winners were the industrialists, people with factories. If you have a factory, it's a factory. It doesn't matter what the currency does. People who had gold in Switzerland, people who had assets overseas, they were the winners because they were not wiped out. Then they went around and bought up all the losers, consolidated industrial holdings into relatively few hands. Then they decided that Hitler would be a good puppet for them. That didn't work out too well in the long run, but we've seen this movie before. So watch what Buffett does. He's dumping paper money, getting into hard assets. But there are many, many other examples. And, Alex, when we talk about this collapse, I think the government and the Federal Reserve would like to avoid it, but there's another part of them that knows it's coming. So they've got their own plan B ready. And like we said earlier, you don't have to, break into a safe in the middle of the night. They actually put this stuff on their website. Go to the IMF website, the International Monetary Fund website. They published a paper in January 2011. It's on the website, and it's a 10-year plan to make the SDR, that's the special drawing right. SDR stands for special drawing right, the global reserve currency. Now, what's an SDR? Well, it stands for special drawing right. That's a really geeky name. What it is world money. Now, so why did they call it an SDR? Well, they knew if they called it world money, it might scare people. So they gave it this really, technical name so people would sort of yawn and look somewhere else. It's kind of like the Federal Reserve. I mean, the Federal Reserve is the central bank of the United States. Why did they not call it the Central Bank of the United States in 1913? Because they knew that Americans hate central banks. So they called it the Federal Reserve. Well, the same thing with this world money. It's the special drawing right. Now, by the way, there's nothing new about SDRs. They were invented in 1969. They've been issued from time to time. They were actually issued in 2009. I might have been the only guy outside the IMF to notice. But this is just printed money. And by the way, the easiest way to understand it, it's not that technical. The Federal Reserve has a printing press. They can print dollars. The European Central Bank has a printing press. They can print euros. The IMF has a printing press. They can print SDRs. And they do. And they have. And they're not backed by anything. And it'll be highly inflationary, except when so the next time there's a liquidity crisis, remember the last time there was a liquidity crisis, and a financial panic in 2008. The Fed bailed out the whole world. We know they printed $4 trillion, but that was just the tip of the iceberg. They did tens of trillions of dollars of swaps, guarantees, with the FDIC, guaranteed every bank deposit in America, guaranteed every money market fund in America, propped up the system for the benefit of the elites, the power elites who actually benefit the most from that. But there's a problem. They're tapped out. In other words, they haven't unwound any of that. A lot of that's still in place. So when the next crisis comes, it's going to be bigger than the Fed. They're not going to be able to go to 8 trillion or 12 trillion on their balance sheet, because they'll destroy confidence. So where is the liquidity going to come from? It's going to come from the IMF in the form of SDRs. It will be highly inflationary, but no one will understand where it's coming from. I call the IMF transparently non-transparent. And what I mean by that is they're transparent in the sense that they put these plans on their website, but they're non-transparent in the sense that no one understands them because it's all technical.
Sure, exactly. They try to play both sides, and they consolidate power on the way up in the bubble. They consolidate power during the collapse, always posing as the savior. They never get in trouble. So you've broken down the technicals beautifully, and I know your book gets into more detail. How bad is it going to get? Because they're funding destabilizations in Eastern Europe. They're funding, this new caliphate running around, starting a civil war, blowing up Shiite mosque. I mean, look, I understand they don't know what they're doing at many levels, trying to put it off so they can say they tried to do it. But on the other hand, they're trying to destabilize things at the same time. I mean, the evidence is there. What do they think they're going to get out of this? Where is America going? How bad is it going to get? And what's the time frame? Because am I wrong in saying that we're seeing major signs that the creep towards the exits at the movie theater is starting to get a little bit faster here? Because it looks like the dollar's in trouble here.
Well, the dollar's in trouble, but so are global capital markets, and the signs are everywhere, Alex. Let me give you a very concrete example. So we're watching the stock indices. I guess the stock market's off a tiny bit today, but they've been going up and up and up. They're at all-time highs. They're at record highs. And the mainstream media says, hey, happy days are here again. Stock market's at an all-time high. Get out there and buy some stocks. Meanwhile, this is going up on very high leverage, meaning borrowed money. So New York Stock Exchange leverage is at an all-time high, and it's going up on very thin volume, which means that not many people are participating. But meanwhile, what the experts, the pros, are buying put options. Now, a put option is a way to bet that the market's going down. So let's say I have a lot of stock and it's been going up and I've been making a lot of money. Well, I might want to get out, but if I start selling the stock, I might be the snowflake that causes the avalanche, and I don't want that to happen. So what they do is they go over here to a different market. They buy put options, which is to bet the market's going to go down. Now, remember the Chinese, they got the paper, but they also have the gold.
Yeah.
The pros have the stocks, but they also have they're hedging. So when the market crashes, the little guy's going to get wiped out on his 401k, but the big guys, they'll lose money on their stocks, but they're going to make money on their puts and lock in their profits. This is the kind of thing that's going on behind the scenes. You have to be a bit of an expert, a bit of a technician to see it, but it is visible. All this is publicly available.
And it's accelerating, correct? They're not just hedging now. From what I've seen, they're piling on to getting out of all the pop assets on the NASDAQ and the Dow Jones, and they're moving into the most hardcore of stable assets.
Right. Well, they want to. Well, some of them are doing that. Warren Buffett's a good example. But for people who want to hedge themselves without, because remember, if you start selling the stock, you might be the guy who causes the avalanche. What they're doing is keeping the stock to some extent, but buying these put options. So now they're hedged. The market could go down. They don't care because whatever they lose in the stocks, they'll make in the puts. But the little guy is not a.
How long can this go on? How long can this go on?
Well, one of the hard things is some of these things can go on longer than you expect. It won't go on forever. I don't think it'll go on much longer. I don't think we'll get 2 or 3 years down the road. We might not get 1 year down the road. I don't want to say it's going to happen tomorrow because look, the thing about bubbles is they go on longer than we expect. But I wouldn't be waiting for the day. See, a lot of people, I talk about this all over the world, Alex, and people invariably come to me and they say something to the effect of, hey, Jim, call me at 3 o'clock the day before it crashes. I'll sell my stocks and buy gold. And I say, it doesn't work that way. I'm not going to know the day before. I can see it coming for sure, but I'm not going to know the day before. The time to prepare is now. The time to get out of stocks, get some gold. Don't go overboard. I recommend 10% gold. Other kinds of hard assets, sure. Fine art, et cetera. The time to do that is now. By the way, for the small investor, when you want gold, when gold starts gapping up, when I say gapping up, $100 an ounce, boom. Next day, up $200 an ounce, boom. Next day, up $300 an ounce. A week goes by, it's up $1,000 an ounce. It's running away. That's when most people are going to say, oh, gee, I better get some gold. Guess what? You're not going to be able to find it. The mint will stop shipping. Your local dealer will be out. The big
you want to get it beforehand.
Sovereign wealth funds. Correct. That's exactly right.
Well, look at the Chinese government, the University of Texas. They've all been quietly hoarding it while they use all these naked shorts and things to drive down the overall price of gold. But as real inflation kicks in all commodities, I don't think they can suppress the price of gold much longer. I would imagine it's going to go up in the fall. What do you say?
It usually does go up in the fourth quarter. Fourth quarter is usually strong for gold. I think the technical setup is good. I was in Switzerland recently, and on this last trip, instead of visiting the banks, which I usually do, I went to see the guys who actually store gold, the top secure logistics firms in the world, and the guys who actually refine gold. So people handling the physical stuff. They told me stories that'll make your hair stand on down. I talked to the largest refiner in Switzerland. He said he's working triple shifts, so 24 hours a day. He's producing 20 tons of gold a week. The Chinese are taking half, so there's 10 tons of gold a week going to China times 50 weeks. That's 500 tons a year. Remember, I mentioned earlier, there's not that much official gold in the world. So he said the Chinese want more, but he said I won't sell it to them because I have to take care of my regular customers. And he said for the first time, I'm having trouble sourcing gold, meaning, when you're a refiner, you take gold from, scrap and jewelry and miners and other 400-ounce bars, and you re-refine it into what the Chinese want, which are 1 kilo bars of 4.9 purity. He said, I'm having trouble sourcing it. I said, well, when was the last time that happened? He said, this never happened. So the technical setup is very strong. Gold is just, the reason gold had a weak year in 2013 was because the Exchange Traded Fund, GLD, that's the ticker symbol, disgorged 500 tons. That was a raid on the GLD warehouse by the big banks who control that warehouse because they were sending that gold to China. Well, you can't do that twice. I mean, you can do it once because they had, I think about 1,100 tons at the beginning of the year. So take away 500 tons. Now you're down to 600 tons.
So now is the time, in your view, to buy gold, but people never do. They only buy once it's racing up. It's of course, I buy when it's low. I bought most of my gold at about $300 to $500 and haven't sold any of it. Also, our guest, James Rickards, has a lot of courage, best-selling author of Currency Wars. He's going to come back and talk about that. The Death of Money, the Coming Collapse of the International Monetary System is his new book. And I've not read it yet. It just came in last week, and I've had family in town and stuff and then been out of town. But I'm going to read it immediately. But hearing him talk, it's some of the most cogent, focused analysis I've ever heard.
Now, I'm glad you watched it all the way through to the end. And if you want to protect yourself and your family, please use the link below to get started.